Hello, everyone, and welcome to the show. My name is Chris Alemo, and I am an amateur investor. This podcast is my open source journal of everything I learn about investing and wealth management. I'm here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path towards financial independence and financial literacy. My mission is to build us from amateurs to experts. All suggestions are my own, and I recommend that you should do your own research before taking any investment advice. See you in this week's episode. I hope you enjoy. All right. How's it going, everyone? Welcome to the Amateur Investors, another episode with Luke. I'm going to fuck up your last name. Mika?
It's close enough, brother. I think the correct pronunciation is Mikic, but it's a tricky one.
Mikic. All right. Well, Luke, we've been in communication over Twitter. We've done a couple Twitter spaces together. I just love for you to intro the audience of who you are and kind of what you do.
Yeah, so I just describe myself as a 26-year-old Australian bogan who talks shit online. That's all I do. I write articles. I host a couple of different podcasts, and I've been fascinated with Bitcoin for the past 6 years.
That's awesome. I did not know you've been in the space 6 years, so that is awesome to be in it for that long. I can't believe how fast time flies. I'm class of 2020, and I can't believe I've been in it for 3 years. It feels like 12 years, but there's a lot always going on in the space. So, Luke, if you want to kick off, I guess what got you into Bitcoin 6 years ago?
Yeah, so I was studying a double major in maths and chemistry at university. At the time, I was, 17 and homeless. So always had a little bit of a fascination with money. It was more from a necessity for me. So I was always looking for ways to kind of get ahead, save an extra buck. And I came across Bitcoin 2017, heard about it because the number was going up. I learned enough about it early on to realize there's something really here, something really, really big. So I took a gap year off university, to dedicate more time to studying Bitcoin, started my own personal training gym business, just to kind of keep money flowing in while I was studying Bitcoin. And the rest is history. Never went back to university. And, 6 years, time flies when you're having fun.
That's awesome. That's a really, really cool story. So I guess, did you dabble in the altcoins at all? Because 2017 is probably right before, Bitcoin Maxi, or the pejorative Bitcoin Maxi, was kind of minted. I know many OG Bitcoiners were kind of like, oh, maybe there is a multi-chain world or a multi-crypto world. But I'd say probably middle of 2017 with the block size wars, that kind of hardened many Bitcoiners to be like, nope, it's Bitcoin and Bitcoin only. Obviously seeing a lot of the altcoins wash out tail end of 2017, 2018, when the bear market really hit, kind of hardened a lot of Bitcoiners and been like, no, it's Bitcoiner only. And then, of course, there are the crypto people at Broad, and they're always scamming, pumping, and dumping continuously, and that never ends. It's a little bit more difficult in the bear markets, but I guess I'm just curious: were you Bitcoin only from the beginning, or did you have a little bit of an altcoin and kind of realized pretty quickly that it's only Bitcoin?
Oh, no, it took me ages to figure out what Bitcoin was. I didn't even find Twitter until 2019. So I was shitcoining really hard in 2017. I came in just after the block size wars. See, I looked at Bitcoin, I understood the halving, I understood the fact that it was digital gold and it was a solution to the broken fiat monetary system at the time. But I was still trading shitcoins. I kind of knew they weren't the same as Bitcoin, but yeah, it took me years to understand what Bitcoin was. And it wasn't really until I got on Bitcoin Twitter and I started getting dunked on by a few of the maximalists that I realized, hang on a minute, I need to go down these rabbit holes as well. And, I wouldn't say I was fully orange pilled until 2019.
Yeah, I think that's perfect. That's a good example. I had a brief 2-week period of shit coining, and then I realized it was bad because of the Bitcoin Maxi. So I owe it to them for avoiding that train wreck of a thing. But I don't have a clean record either. So I wish I did, but it is what it is.
You got two weeks of shit coining. I had 2 years of it, brother.
So you got, I built on the shoulders of giants, or built on, shoulders of giants. So they were able to avoid me from going down a hazardous path. So many thanks to them. So obviously Bitcoin is seen as global money, as you and I see it. I'm here in the States, as many people can see by your accent, you're from Australia. I'd say 2020, I don't want to get demonetized from any of the platforms. Let's just say the world kind of fell into chaos, and some governments were better than others. The US does not fall out of that regime, being one of the worst ones. But luckily, we have a thing like 50 states, as many people know. So there are jurisdictions that are much more friendly towards business and people's personal freedoms than others. Australia falls on one end of the spectrum that it was not friendly. So if you want to take us through the brief journey of, escaping Australia or the craziness that ensued there, I've just only saw what I saw on Twitter. And, on Twitter, it can be very polarizing. Some people say it's bad, some people say it's not. So I'd love just for your perspective on how everything was in Australia, and then ultimately what made you escape or want to leave.
Yeah, so I read 1984, Orwell's book in maybe 2018 or 2019. I also paired that puppy with The Sovereign Individual. I think I might have read that the same year, 2019. So I was a little bit, aware of how things can really turn really nasty if you give a government too much power. And obviously reading The Sovereign Individual, they predict in 1997 that the internet is going to bring about the downfall of the nation state and governments as we know them today. And in that book, they said they're going to become very tyrannical, very radical, and they're going to come after the people who have money. So yeah, as soon as COVID happened, I said, okay, this is their perfect excuse to reset the monetary system and, implement CBDCs. So as soon as it happened, I said, okay, I have a gym. That's my business. I know I'm not going to enforce the medical mandates that eventually come down the pipeline. Early 2020, I knew how it was going to end. It's going to be, compulsory medicine, or, the rhetoric was very obvious early on. So as soon as that popped up in 2020, I was like, okay, need a new career, need a new business. I love this Bitcoin thing. Maybe I need to try to transition more into the Bitcoin space and look for an online job there and gain an employer who's not going to force me to do things I ain't going to be doing. So that's when I started the YouTube channel and started writing in 2020 and 2021, taking Bitcoin a lot more seriously after I closed the gym business. But the only issue I had, was I couldn't leave Australia. So that actually locked the international borders. And especially if you're of the medical status that I was, I actually had to ask the government's permission to leave. So if you're unvaccinated, you can't go on holiday. Like, you are locked in. And the only way you can leave is if you write a letter to the government asking permission to leave the country permanently. And you need to get your job to sign the letter. You need to, go under oath and all of these sorts of things. So yeah, 2022, one of the first international flights that left Australia, I was on it as soon as the international borders opened up. And since then, I've just been hopping around the world, traveling from conference to conference and meeting Bitcoiners. So it's been great.
That's awesome. I guess that's awesome. And it's also wild. So I hope everything is all right with you. And I hope you're enjoying the new life. Definitely seems like a crazy one for sure. Well, I guess tying that into Bitcoin being global money. So obviously when you're going from country to country or place to place, Bitcoin has kind of an exchange rate everywhere in the world because it's traded 24/7, 365 across jurisdictions and all of that. So have you been trying to live on more of a Bitcoin standard, or do you try and get some of the local fiat currency? Or I'd love to hear your perspective on it all.
So I've been all in Bitcoin since I probably shouldn't say how long. Oh, well, I don't know, 2020, 2021.
Okay, that's awesome.
Yeah, I only really keep like 1% of my portfolio in Bitcoin or out of Bitcoin at any time. So I'm always, like, every country I go to, I'll try to get, $1,000 to the local currency. So whether that's Mexican pesos or whether that's US dollars, like it is here in El Salvador, or whether it's Peruvian soles, that's the currency they use over there, or Canadian dollars. So what's my experience been like? It's an interesting one, that's for sure. Like, I would have thought that more people would be accepting Bitcoin here in El Salvador than, as soon as you hear Bitcoin's legal tender, you think, okay, 100% adoption, but it's more like 10 to 20. And so it's certainly interesting, but having Bitcoin is like the perfect tool that you need to be a digital nomad, because there's been so many times where I've been trying, it's taken 2 or 3 weeks to get paid, or trying to send money for international transfers with the traditional legacy banking system. It's a nightmare. So there's been lots of occasions traveling internationally where Bitcoin saved my ass. So it's been great fun though.
That's cool. That's awesome. So I know you wrote 2 great articles for Bitcoin Magazine. One is how the United States weaponizes the dollar to retain global hegemony, which was in October of 2022. And then you kind of basically said your next article came out on the same day, actually, was the U.S. will weaponize the dollar by backing it with Bitcoin. So I'd love to say, just to give my listeners kind of like, I understand what you mean by them weaponizing the dollar, but if you can explain how the US weaponizes the dollar and other countries, and then how you think a Bitcoin will be better for them to keep weaponizing it, or at least to stay ahead or stay as number one instead of fall off the perch.
Yeah, so any of my macro analysis, I always like to kind of take a step back and zoom out first, because people hear that claim, you know, the United States is going to weaponize the dollar with Bitcoin, or another claim that I've made is I believe Bitcoin is going to be worth $65 million a pop. And people think that sounds crazy. So, but that's because they don't understand the broader context of what's going on in the world today. So one of the first articles I wrote was 2021, and it was just saying, hey, look, I think the 2020s is probably going to be the most chaotic decade in human history. Okay. When you zoom out and you have a look at everything happening in the 2020s, it's wild. We're at the end of an 80-year long-term debt cycle, unwinding today in the 2020s. We're at the end of a 250-year empire cycle where the US is being challenged by China. We're at the end of a 90-year fourth turning cycle. We're also transitioning into the information age. So that's kind of the sovereign individual thesis. And we're also at the end of a 250-year revolutionary cycle. So I believe that the United States currently has its, you know, its hands on the global reserve currency status. Typically, nations and global superpowers hold the monopoly on the money for around 100 years on average. If you look at the past 500 years, you look at like the Spanish Empire, the Dutch, the British, and the US. So the US is currently getting challenged by China. And now it's actually not just China, it's the BRICS nations. So it's Brazil, Russia, India, China, South Africa, and Saudi Arabia and co. And they're all trying to escape this petrodollar-backed system where the United States, you know, has its grip on the global reserve currency. And I've kind of just came to the conclusion that the US has absolutely no other choice but to back the US dollar by Bitcoin. And they're actually going to do it in a very roundabout way, because I'm not sure, we might get into the dollar milkshake theory later, but I've kind of coined a term or a process that I believe will unfold. And I think it's going to be called the Bitcoin milkshake theory. And I just believe as the dollar milkshake theory unwinds and you watch global hyperinflation of emerging market currencies and the 180 fiats around the world, I believe you're going to see hyper dollarization, and then you're going to see hyper Bitcoinization. Yeah, so that maybe I'll pause there for a minute and we can unpack bits and pieces of that, because I could rant and rave about this for about 20 minutes and I don't want to lose the listener. But
no, I think we should. So I guess so you kind of subscribe to Mark Moss's theory of basically the cycles. So exactly what you said. We're coming to the end of a business cycle, an empire cycle, and then I believe it's an industrial revolution cycle. So, you know, in terms of the internet adoption, in terms of the nation of the United States, and then the 80-year business cycle. And they're kind of all converging at the same time, which is, you know, really crazy. But I guess breaking down into the dollar milkshake theory, I've heard of many macroeconomists talking about this. We've kind of seen over at least 2022, we saw a bid for the US dollar. When you're looking at the DXY or the Dixie, as some people call it, we're seeing as the dollar strengthens relative to all of their currencies. And, you know, you think that would be a good thing if you're a US citizen, which it is when it is your native currency, but they're also experiencing issues with hyperinflation. So obviously we're seeing hyperinflation occur. But I'd love to get your perspective on, you know, the dollar milkshake theory, basically, of it all.
Yes, I believe the dollar milkshake theory is going to play out. Like that's just how I see the world. And I actually think it's going to happen on a far more accelerated timeline than most people believe. So in that article that I wrote in Bitcoin Magazine, I believe that we're going to end 2030 with somewhere under 5 currencies. So there's 180 odd currencies today. And I think we're going to be left with less than 5 by 2030. And the dollar milkshake theory just kind of says, you know, the smaller, weakest currencies are going to suffer from hyperinflation first. So that's like, you know, there's lots of those currencies in Africa. You've got the Turkish lira, you have the Argentinian peso, the Sri Lankan rupee. I expect all of them to go through hyperinflation, and they're going to be forced with a choice. So the choice is going to be, okay, what do you adopt as your new form of money? Obviously, a lot of these countries of the 180 that I believe will hyperinflate, a lot of them will use US dollars. So I think there's over 50 countries right now that are dollarized and they use the US dollar as their local currency. So I'm not saying the entire world's going to adopt a Bitcoin standard tomorrow. Lots of these countries will adopt US dollars, but this is where the Bitcoin milkshake theory comes into it. Because the countries who adopt Bitcoin as their local legal tender won't just be able to adopt Bitcoin. So let's think of a hypothetical for a moment. Let's assume Turkey enters hyperinflation tomorrow. That's not actually a wild assumption because their inflation rate right now is above 100%. So let's assume the Turkish lira hyperinflates. Let's assume tomorrow Erdogan says, okay, we're going to accept Bitcoin as legal tender. Well, Erdogan can't just accept Bitcoin because Bitcoin's far too volatile to actually use as a medium of exchange or a unit of account right now in Turkey. Like Bitcoin's pumped 60% in the past 3 weeks. It's far too volatile to price goods and services in. So I believe that the countries that adopt Bitcoin will also have to adopt the US dollar to use as a stable pricing mechanism, just because it's the least worst fiat currency there is in the world. It's only losing, 15% of its value against goods and services every year. These other currencies like the Japanese yen and the euro are losing more like 25 to 30% of their value. So I believe the countries will be forced to adopt US dollars if they adopt a Bitcoin standard, while we're still so early in this, hyper Bitcoinization journey. And then it gets really interesting because there's another layer to this. Because as you see Bitcoin adoption increasing, what you also see is stable coins increasing in volume. That's simply because stable coins are very convenient. The people who adopt Bitcoin, sometimes they're a little bit scared and to put 100% of their net worth in Bitcoin. So they adopt some local stable coins because that's far easier and a little bit more permissionless than, trying to hold dollars in your local banks. Like a lot of these banks in Lebanon, they don't even let you hold US dollars. They just confiscate it overnight. So there's a lot of demand out there for US stable coins. So I've kind of made the case that as Bitcoin monetizes, so will stable coins, US dollar stable coins. I believe like 95% of the stable coin market right now is actually backed by US government debt. So this is where things get really interesting, because if you look at Tether and Circle, so they're the two largest stable coins, USDC and USDT, they are like more than 80% of their backing is backed by US government debt. So Circle's 100% backed, and Tether right now has actually been on a journey over the past 12 months of selling its risky commercial paper that it was holding. And Tether's been buying more and more quote unquote safe and liquid US government debt. So that's really interesting. And I believe that as Bitcoin monetizes, as the market cap of these stable coins blow up and increases, what you're going to see is all of a sudden, I believe that the United States government has found a sugar daddy to buy all of its US government debt, because right now the stablecoin market has blown from $5 billion to something like over $150 billion in the past 2 years. And if that's, if the majority of the stablecoin market is backed by US government debt, all of a sudden the US is kind of like, okay, maybe it's not such a bad thing that Russia, China, Japan, and they're all, they're selling their US treasuries. Because the United States has found a new buyer of those treasuries. So I believe the Bitcoin milkshake theory is kind of how the United States is able to navigate the unwinding of the petrodollar system. And I actually think they're the country that is best positioned, not only geographically, but also economically, to weather the unwinding of this 80-year long-term debt cycle. And I expect them to hang on to their global reserve currency status a lot longer than most people think, if they are friendly to Bitcoin and welcome it.
Yeah, that's awesome. I was talking, we had Preston Pish on Bitcoin Magazine Pro today for Spaces, and he was talking about, Dylan and Preston were talking exactly about this, that there's an explosion in the use of stablecoins, and they were kind of insinuating exactly what you were saying. Russia and China both have stopped buying the US debt through treasuries or bonds. So basically they need other buyers of it. And also, they didn't allude to this, but I've heard other people allude to this, that basically they're going to need they might need to bail out Bitcoin and crypto in general, because in order to keep this fiat Ponzi going, of they need people buying bonds. And I was telling this to my fiance. She was kind of like, well, why does this whole system happen? I kind of tell her through 2008 financial crisis, and China was pissed when they had a bunch $1 trillion, I think about $1 trillion of US bonds outstanding, and basically the US government decided we're going to screw over bondholders. So if you're a US bondholder, which China had over $1 trillion worth, or if you are holder of the currency, we need to print a bunch of this money in order to keep this economy afloat, in order to prevent all these banks from defaulting, and to prevent people from having no money in the banks, because the bank runs out of literal fiat currency, or for what people to take out from their paychecks. And ultimately, they did that, and they saw not as much inflation as they thought until 2020. And China got very pissed by I think 2013 or 2014. China was basically like, yeah, you devalued us by a ton. We're no longer going to start buying we're no longer going to keep buying your treasuries. So now we have a $1 trillion hole that China is now selling treasuries slowly over time. And then basically that became what known as the Belt and Road Initiative. So basically, instead of taking US dollars and buying treasuries and or buying stocks on the US stock exchange, also there was limits set that China just can't buy up our whole stock market, because then there's conflict of interest. If China owns 50% of a company, they could basically put board members in and do things like, we basically become the China of USA stock market. They could put board members on and basically opt to put whatever. So I think there was limits put of they can't have more than 20% of any one company. So it kind of limited there, and treasuries were the only thing that they could do. They started this Belt and Road Initiative that basically they take US dollars, they send us cheap shit or cheap goods, and then they plant those US dollars with a catch to African nations, to West Asian nations, or just countries that are in need of money. But basically they're normally on predatory loans of hey, we're going to give you $10 billion, but at a 15%, interest rate or whatever it may be. And we'll build you an airport, we'll build you a road, we'll do all this. But normally they send in Chinese contractors and Chinese companies. And basically it's kind of, I don't know if you've ever read The Economic Hitman, basically where, they're basically weaponizing currencies, or weaponizing currencies in order to get your will. And, okay, we're going to get this airport, we're going to get this road, we're going to get this infrastructure building, but the Chinese are going to come and build it. If we default on our debt, we have to take out another loan that we owe them even more money. And or basically they can set up whatever they want, whether it's Chinese surveillance systems, or they have to use the electric yuan, basically there's CBDC yuan in that country. So there comes with stipulations. I know that's kind of a long-winded answer, but I guess what are your thoughts on the US government bailing out Bitcoin and stable coins, and the weaponization of the US dollar, but even China using the US dollar and the Chinese yuan to weaponize their currency? I don't know if any thoughts on that.
It's brilliant. And that's exactly, what happened post 08 crisis. You absolutely nailed it. And it wasn't just China who started looking for an alternative to the US dollar in 2013, 2014. It was also Russia. That was when Russia actually began de-dollarizing. So 08 was the big it was the catalyst. It was the thing that woke up nations all around the world that, okay, we need to start looking for an escape out of holding US dollars. And in 2009, I believe it actually started a decade-long trend of central banks accumulating gold. So if you look at the amount of gold central banks had bought since the 1970s, they were selling gold for pretty much all of the years in the 1970s, in the 1980s, 90s, early 2000s. And then all of a sudden post 08, that trend absolutely flipped and central banks started buying gold en masse again for the past decade. So yeah, it's certainly very interesting. And I think the United States government probably will have to bail out the Bitcoin market in the future, because they're heavily incentivized if all of these stablecoin companies are backed by US government debt. So I think it's going to be really interesting to watch that play out.
Yeah, and actually, that's a point that I want to hit. So aside from Russia coming off the U.S. treasuries or U.S. bonds, because they saw the risk of basically, China, what they did to China, we're coming up on the year mark, if we haven't passed it, of basically the Ukraine-Russia conflict. And basically, I think Russia lost, correct me if I'm wrong, but I think it was $300 billion worth of treasuries that when we cut them from the SWIFT system, obviously we did not allow them to, exchange their treasuries for U.S. dollars, or, basically that exchange of we cut off the flows of basically any banks that had U.S. treasuries that were denominated to Russian citizens or oligarchs or the country of Russia. Basically, we basically confiscated that money back. And then, many people thought so we saw the Russian ruble collapse very shortly for a couple weeks or a month max. And then all of a sudden we saw a trend reversal that the Russian ruble actually saw a bid higher than the US dollar and the Dixie. And many people don't understand what that happens, but it makes sense. Russia is an oil-rich nation, and even though that they have a lot of issues with political or all that, since they're an oil-rich nation, they can sell their oil and in exchange for Russian rubles. So basically, they were like, hey, we're not taking the US dollar. We're going off the petrodollar system. And many people have called it the death of the petrodollar system, is basically the start of the Russia-Ukraine conflict. So I guess I'd love your thoughts on that basically they have something that everyone wants. Everyone needs energy, to fuel your car, to power your home, for us to do this Zoom call right now. We need energy or electricity in order to do this. I guess any of your thoughts, and maybe is this the death of the petrodollar and this is the fight for global reserve status between China, Russia, the United States, the BRICS nations, whatever it may be. Any thoughts there?
Yeah, thanks for reminding me. I'm a little bit under the weather today, and I completely forgot to mention the most important part about why the US will weaponize the dollar by Bitcoin, and that's because they're not going to do that from a move of strength. They're going to do that from a position of weakness. And the reason for that is because their competitors like China and Russia are some of the biggest gold holders in the world. So if the United States, if everybody's come to the conclusion that, okay, the US dollar is a Ponzi scheme, nobody wants to hold US government debt because they're going to, either devalue it by 40% overnight like they did in 2020, or in Russia's case, they're just going to confiscate it straight off you. Nobody wants to hold unbacked currencies. So I believe what we're going to see is we're going to see the BRICS nations kind of move to create their own reserve currency. They've already announced that in mid-2022, they're creating a new reserve currency. I believe, like many other people in the space believe, that this could be backed by a basket of commodities like oil or, just wheat. I think that's a terrible idea. But, a lot of people are talking about the fact that China, Russia, they're going to create an either gold-backed or a commodity-backed currency. And if they go the gold-backed currency route, I believe that this is where the US is kind of forced to go to the Bitcoin option. Because if China is sitting on what's rumored to be over 20,000 metric tons of gold, and Russia is the most backed fiat currency in the world, if you look at the amount of gold they hold and the amount of Russian ruble there is in circulation, does it make sense that their competitor, the United States, strengthens the price of gold and backs the US dollar by gold? I personally think a gold-backed standard for the world benefits China and Russia more than the US. So I believe, the US is going to be forced to pivot to Bitcoin. And it's just, it's just interesting now that you've got over 30% of the hash rate sitting in Bitcoin, sitting in the US, and a lot of the largest Bitcoin holders are also US people, US companies, US billionaires. So I just think it makes so much sense that the US is the first country to adopt Bitcoin. You've even got Janet Yellen, the little Yoda-looking lady at the head of the Treasury, coming out and saying, look, Satoshi Nakamoto's innovation is real. And then you've got the head of the chair of the SEC, Mr. Shitcoin Destroyer, what's his name? Gary Gensler. He even came out and said the same thing. He said, look, Satoshi Nakamoto's innovation is real. You have Bitcoin over here, you have shitcoin over there. Like, they're the two of the largest talking heads in the financial system in the United States, both praising Satoshi Nakamoto and dunking on shitcoins. I think it's overwhelmingly a sign that the US is postured and is posturing towards slowly and quietly adopting a Bitcoin standard.
Yeah, I agree. Yeah, two of the not just two of the biggest figureheads in the United States, but arguably the world, because with the US dollar being the global reserve currency, that's kind of the privilege that they have. I guess my question where I'm leading next, I don't know if you saw the news that came out of the EU. I think it was yesterday or even today. The EU basically said they're allowing banks to have Bitcoin on their balance sheet, which is kind of bullish. But at the same time, they're putting in caps. So meaning that like retail, you or I, if we wanted to go to the UK or the EU in general, sorry, not the UK, the EU in general, and we wanted to get, let's just say $10,000 worth of Bitcoin, they might say you're only allowed $1,000 worth of Bitcoin per week, per month. I don't know exactly what the restrictions are. And we've seen Christine Lagarde, she's the head of the bank of the ECB, basically say, like, if there's any escape hatch, we have have to squash it or close that door to prevent people from escaping. So the ECB or the EU is in a different situation than the US in terms of they have weak people, weak countries on their balance sheet, such as Portugal, such as Italy, such as Spain is also weakened as well, where Germany is kind of more of a manufacturing hub. And she's used terms in the last couple months that we're using anti-fragmentation policy. Basically, what that means is she does not want Germany to be like, hey, we're pissed that we're picking up the bill for Portugal, Italy, and Spain. Like, we want to get the fuck out of the EU. But like, if the Germany were to leave, that would really, it would fracture the EU. Germany would definitely strengthen, but then you see a collapse, or, you know, we see unrest in Italy, in Portugal, and Spain. On top of that, the EU currency, or the euro, like, I don't know what that means for that currency. Does Germany not accept it? Do they create their own currency? Do they back it with gold? Do they back it with commodities? Do they back it with just stuff in general that they're exporting, like cars or whatever it may be? I guess my question is, so do you see the US following the EU's ruling? And let me caveat that. So the EU is kind of doing like something that's kind of nefarious. They're like, it's not a law. January of 2025, 2 years from now, or just about 2 years from now, they're like, we're going to put all these restrictions in. But they basically told banks, you better like adopt these now or else. And they didn't really define what the or else is. But, you know, many companies, they don't want to go against their government or governments or whatever it may be. It's kind of like, I don't want to get in trouble. I'm just going to go my route. So whether it's the banks in the EU or Europe, are just gonna be like, yep, we're gonna put in restrictions, or maybe even harsher restrictions than the EU was expecting. And, you know, basically, if you're a good boy, we'll give you better tax treatment. If not, we'll tax you out of oblivion, or we'll take you to court, or X, Y, and Z. I know that was kind of a long ramble, but I guess, what are your thoughts on the EU? Does the US go like that route of, you know, maybe even introducing CBDCs, which they've talked about, but, you know, it's kind of unsure. Is it 2026? Is it 2028? Is it dead on arrival? I just love your two sats on, is the US going to follow the EU, or might they do something like a 6102 attack like FDR did in 1933, or confiscating your gold, or confiscating your Bitcoin, maybe even real estate, whatever it may be, to prevent our currency from blowing up? I know that was long-winded. There's a lot of points that you can hit there.
Lots to unpack there. It's really interesting. It's a really difficult question, that one. So I think the EU is going to be more tyrannical than the US. I think that's a good point to start. So obviously the whole Great Reset agenda that is centered out of Europe. Europe's the region that's really pursuing the CBDC route aggressively. The US doesn't quite look as interested. And this is something else I talked about in that article of the US weaponizing Bitcoin and the US dollar. I was kind of looking at Tom Luongo's thesis. He believes the US is actually at war with Europe, believe it or not, which is really interesting because we're supposed to be allies. But you can kind of see a divergence in monetary policy between Christine Lagarde at the ECB and Powell at the Fed. So Powell at the Fed in 2021, he's changed his tune. He said, hey, look, we don't care about climate change anymore. We're not going to be printing money and devaluing the US dollar all because of this global kumbaya climate change agreement. We're getting off that bandwagon, Christine. And Christine's been pretty angry about it because over there in money and devaluing the euro to fight climate change. So I think what you're going to see, that's a very big signpost that the EU is all about this Great Reset agenda where you own nothing, you'll be happy. We're going to devalue your currency, and, you know, we're going to devalue your cuck bucks all because of the climate, and we're going to put limits on how much Bitcoin you can hold on your balance sheet. And this is all because, like you said, Chris, they need to really kind of constrict the escape valve over there in Europe, because their banking system is a lot more fragile than the United States. So I think, I'm not sure whether the US is going to do 6102s and, you know, seize Bitcoin. I actually think the US wants to look attractive in terms of international capital flows. So I think the US is just kind of sit there and, you know, do nothing. And while countries like Europe do bank bail-ins and caps on the amount of Bitcoin you can hold, or if you're in Britain, they put caps on how much Britcoin you can hold. You can't hold more than 22,000 pounds worth of Britcoin. All of that in Europe is going to be an advertisement for international capital to leave Europe and continue moving to the United States, where I think they're probably going to be less tyrannical. Like, the US still has its issues, still could do a 6102 to get a whole lot of Bitcoin on its balance sheet. But I just don't think the United States government needs it. Like, maybe they're going to tap someone like Michael Saylor on the shoulder one day and say, hey, buddy, you know, that Bitcoin you've got, it's now part of the United States government's treasury reserve. So it's really hard to predict and speculate, but I'm not sure how that's going to unfold, but it should be interesting to watch.
Yeah, and we've kind of seen over the last 3 years have been pretty polarizing, to say the least, in terms of presidential elections, in terms of everything that's going on in the world. It'd be very interesting that, like, it seems when certain states go right, other states go left. Hey, we're requiring you to get X, Y, and Z, and then the other states are like, we're saying it's illegal to do that. So I'll just leave any of my listeners to fill in the blank what I'm referring to. But basically, it does seem like a lot of the states are back and forth and kind of at each other's throats. You hate to say it's across the aisle, but it kind of is. And I guess my last thing before we get into your bullish talk of $65 million Bitcoin, I'll keep the listeners waiting and wanted to hear your explanation for that. I guess, what are your thoughts on the polarization of Bitcoin? So obviously, me being a U.S. citizen, I know you're not, but you probably see it on Fair Enough on Twitter that it seems to be people that are more on the blue or Democrat side are kind of against it, where people on the right or Republican or red, are kind of more welcoming or open to it, or see the innovation or want it in our borders. I guess, what are your thoughts from maybe an outsider looking in on the US, like, polarizing things? I know we're very different than many places across the world. It's kind of like many places across the world, it's not polarized. It is what it is. But, like, it seems in the US, maybe with, the currency breaking down and things becoming crazy, like they described in the Sovereign Individual, you just got to see this ludicrousy, or that, everything's got to be polarized, or it's got to be divided in order to maintain order in a way, even though the division creates control in a way. I guess, what are your two thoughts on that?
Oh, you nailed it. The division creates control. Like, the way I look at the whole left versus right situation in the United States is it's been weaponized. So, like, obviously Yuri Bezimov, he did a really good speech. I think it was in the 1980s, and he was talking about how you demoralize a country through subversion and just narrative warfare, and that's exactly what's going on. Like,
and he was saying even back then in the 80s that, like, oh, it's like complete, but, like, he was saying that and he was true, but it's only gotten worse from what he basically said, which is really crazy. And correct me if I'm wrong, Yuri was he was from Russia, I believe, or I don't know what his relation was. And I think he was on a US talk show, or maybe he was in Russia talking about it, which is crazy to think about.
Yeah, Yuri was like, so in Russia, they have like a CIA, but it's called the KGB or something like that.
The KGB.
Yeah, and Yuri used to work for that. And he said, okay, I'm a Russian, I'm an ex-Russian agent. This is how we try to demoralize a population. We use these narrative warfares, and it's all, you want to, you divide the populace, that they'll never revolt. So it goes back to the old Roman quote, bread and circuses. If you give somebody bread and circuses, they'll never revolt. So that's the whole left versus right debate that's going on in the US. I believe the mainstream media outlets are weaponizing that, and they're kind of leaning into that narrative because it's good for clicks. Like, the more divisive you are, the more controversial you are, the more clicks you get. So in terms of how that division affects Bitcoin, I really hope Bitcoin stays bipartisan. I wouldn't like to see it become like only the red, like Bitcoin. So I like what the progressives are doing. Even Peter over at What Bitcoin Did is trying to get all the progressives on the podcast. Like, I think that's a net positive thing. But I definitely prefer Bitcoin stay non-partisan.
Yeah, and a shout out to Bitcoin Policy Institute, everything that they're doing. They're kind of a think tank that's trying to help guide DC to keep it bipartisan and not make this a partisan issue, as well as the progressive case for Bitcoin. Jason Myers is writing, and he was on Peter's podcast talking about, Bitcoin's good for progressives. And Jason's very interesting. He's a teacher in a very blue state in a very liberal area. And, like, they think, like, when he tells his friends he's into Bitcoin, he says the look of horror on their faces that you, like, think he was, like, killing babies and murdering puppies. He's like, no, it's like actually a good thing. And, like, I guess a lot of people I hate to say the NPCs, but basically they've been brainwashed to think Bitcoin bad for the environment. It's hurting our narratives. It's hurting our initiatives. And I really appreciate what he's doing to try and break it down and say, no, wait, back up. Don't listen to what they're saying. It's actually a good thing for the environment. It takes methane out of the atmosphere for, instead of venting methane into the air, it's a net positive. And I think that everything's good for Bitcoin, but, it's good to have both sides fighting on the same team for sure. All right. So now we're getting to the tail end of the show here. And I want to give my listeners some some bullish news. So you're probably one of the more bullish takes. Maybe CK is probably the only person that's like, it's in, you know, CK and Canute are like, it's infinity divided by 21 million. So like, you know, there is no fiat price. It goes on exponentially forever until, you know, eventually no dollars are exchanged for US dollars. So I'd love your take on the conservative take of $65 million per Bitcoin. Yeah, that's not 6.5 million per Bitcoin, 65 million per Bitcoin. So I'd love your take on this. Yeah, so I guess I was saying, I want to hear your bullish take on $65 million per Bitcoin, not 6.5 million per Bitcoin, 65 million per Bitcoin. You say that's a bearish case. I was saying CK and maybe Canute Van Holm are probably the only people that are probably more bullish than that. They say that they, you know, it's everything divided by 21 million, but I'd love your take on the how you think conservatively we can get to $65 million per Bitcoin.
Yeah, so the reason, and it actually gets more bullish than that. Like, I believe Bitcoin's going to be worth $65 million before 2030. So that's in like 7 years' time. And that's not hyperinflated dollars as well. Like
that's like today's dollars, or
yeah, so I believe one Bitcoin is going to buy you like, you know, 6 or 7 Malibu beach houses in California that today are selling for $10 million a pop. That's the kind of purchasing power I think Bitcoin will be on the other side of this transition. So the reason I think it's going to happen so quickly, and the reason I think Bitcoin is going to be worth so much, it all kind of ties into what we were talking about earlier. The 2020s is going to be a very exceptional period in time. We're living through the unwinding of the 90-year fourth turning, the revolutionary cycle, the tech cycle, the political cycle, and the sovereign individual thesis. We're watching all of that unwind in the 2020s. And I believe Bitcoin is the solution to every single problem we see in the world today. So I think it's going to happen a lot quicker than people think, because there's also technology is being adopted at a faster and faster rate in the digital age. So if you look at the more recent technological adoptions that have gone mainstream over the past 50 years, so I like to look at the personal computer, the smartphone, and the internet, for example, they follow a very interesting pattern. So all technologies that reach mainstream adoption go through what's called an S curve. So if you were to plot its adoption, it takes the shape of an S, and that's where their adoption is very gradual and slow at the beginning. And then it kind of hits a critical point, a critical inflection point, and the masses all adopt the technology at the same time, and adoption is very rapid. So the model that I'm working with is, if you look at those past 3 technological adoptions, the smartphone, the personal computer, and the internet, typically on average, it takes around 10 years to go from 0 to 10% adoption. Then an inflection point is reached. The technology crosses the chasm, and it takes the same amount of time, 10 years, to go from 10% adoption to 90% adoption. So I'm looking at Bitcoin through that lens, and I'm saying, okay, Bitcoin's 14 years old. I believe that post 2020, I think 2020 was the inflection point where everybody around the world started paying attention to Bitcoin, and it has now matured into this different asset that is actually ready for mainstream adoption. And I think, you know, we took 11 years to go from 2009 to 2020. That was phase 1 in Bitcoin's life. And I think phase 2 is going to be 2020 to 2031. And I think Bitcoin's going to be around 90% adopted by 2031. And obviously, you know, there's we can get a little bit more nuanced and a little bit more granular, because Bitcoin's this multifaceted technology. Like, Bitcoin's a monetary technology. So I believe it's going to have these different S curves. So it's going to have an S curve for the store of value. It's going to have an S curve for a medium of exchange. And then obviously the unit of account. So I believe the reason that you're going to see such a rapid monetization of Bitcoin in terms of price is because Bitcoin, the store of value, that's going to be the first S curve that kind of gets mainstream adopted. And I believe there's simply just going to be an absolute supply squeeze, and there's going to be no Bitcoin left for sale in, you know, by 2026 or 2027, and the price of Bitcoin is going to go bananas. Like, for example, so where I got the 65 million from, I just looked at the world's wealth. I said, okay, there's $900 trillion worth of stuff out there. And that's ignoring over the quadrillion that's in the derivatives market. I said, let's just completely not even worry about that. Let's be mildly conservative, and let's look at the $900 trillion of money. I just believe Bitcoin's going to demonetize all of the stores of value that shouldn't be money. So you've got a $350 trillion real estate market, $200 trillion of, fiat currencies and debt. And I just think a lot of that is going to be demonetized by Bitcoin. So I said, let's be conservative. Let's assume half of the world's wealth flows into Bitcoin. And a lot of people will pull out their calculator and they'll say, okay, 450 trillion divided by 21 million, give you a price of Bitcoin of X. But again, another big caveat I made in that paper was that's wrong. You shouldn't be calculating the price of Bitcoin like that. You should actually be using the multiplier effect. So there's 21 million Bitcoin, but not all the Bitcoins are for sale. So if you have $450 trillion of capital trying to flow into the Bitcoin network, well, you've got to actually use the multiplier effect. So Willy Woo has a really interesting model, and he shows that for every $1 that tries to flow into Bitcoin, it actually doesn't increase the market cap by $1. On average, it has increased the Bitcoin market cap by around 2.5x for every dollar. So Willy Woo has like an 8-year chart. And if you look at the past 5-year moving average of this multiplier effect, it looks like on average for every $1 that tries to flow in has like a 2.6x multiplier effect on the market cap of Bitcoin. And it actually gets really, really bullish because as more and more of the Bitcoins become illiquid and they're not actually available for sale, that multiplier effect is going to rise exponentially. So the reason I said I think it's conservative that Bitcoin is, $60 million a pop is because that multiplier effect is going to rise exponentially the closer we get to hyper Bitcoinization, because that multiplier of 2.6, that's taking into account the past 5 years of data where I believe Bitcoin was fundamentally a different asset. I think we can go a little bit deeper, but I'll pause there for a minute.
No, I think that's really, really cool. And actually, it's funny. Have you ever heard of the compound effect? The number that, like, when something's compounded continuously, it approaches the number 2.78 or around there, 2.7. It's when you if you take the equation, like the compounding equation, continuously compounding, not over monthly, daily, yearly, whatever. If you can do the continuously compounding equation, I forget the constant or the exponential number it reaches, but basically it asymptotically reaches 2.71, 2.78. So it's funny that you're saying it's like 2.6 is what it's like, exponentially reaching that, like, when you put $1 in, it's, it creates 2.6. I'm assuming it's going to probably hit that number. And it's like a very numeric equation. I'll send it to you sometime, but it's very interesting that, like, basically Bitcoin is continuously compounding on an ever-inflating supply of fiat currency. So I'll send you like that equation or that calculation, but very, very interesting. I know when I got into Bitcoin in 2020, the thing that fascinated me was obviously not just the halvening and all of that, but basically the dynamics of the difficulty adjustment. And no matter what you do, are you familiar with the date March 10th, 2035?
No.
Hit me. March 10th, 2035 is when 99% of the supply will be mined. And then it's going to take a remaining 105 years to get to 100% complete of 2140 or thereabout. So I was always fascinated coming in of March of 2020 in 2020 when, like, I was thinking about it and I was like, wait a sec. So, like, right now, I think it was like 85% had been mined. We're at like 91% or 90% mined. But by March 10th, 2035 or thereabouts, depending on, difficulty adjustments and all of that, basically like 99% of supply is going to be mined. And basically the remaining 105 years is going to be chasing that 1%, or at least mining to chase that 1%. And then obviously there's markets for, liquidity for, exchanging dollars, or maybe even, like you say, that you can't even exchange fiat currencies. Maybe you can exchange properties, or maybe you can exchange oil, or whatever it may be. So I find it very fascinating. I think it's a race to, 2035 for getting as much Bitcoin as you can. But like you said, it may come sooner than that. I think it's very, very fascinating. I know we're kind of coming to the tail end here. We only got like 5 more minutes. So Luke, thank you so much for coming. It's been a pleasure talking to you. I guess, is there anything that you want to talk about for what you do, work that you are, or where you want to point people to follow more about you?
So I'm a full-time shit talker online. I have a podcast that I co-host with a couple of buddies called the Bitcoin Made Simple podcast. I'm the sole content creator over at CoinBeast. So we're a Bitcoin only educational company, and I manage another different YouTube channel over there. So we have a podcast. I'm very active on Twitter. So check out CoinBeast if you want to hear my daily ramblings and rants over there. And we got a YouTube channel. I'm writing a book actually, so I should publish that in the next few months. And it's kind of touching on a lot of the topics we explored today, as well as technological stagnation and things like the singularity and all sorts of topics that are a little bit adjacent to Bitcoin. I think that's everything, dude. I mean, I'm on Twitter, so if people want to tell me I'm crazy, come tell me I'm crazy on Twitter. Send all your hate mail to Twitter, and thank you so much for having me, Chris. It's we always have one of these chats every 6 months or so, and I love what you're doing in the Bitcoin space. So keep doing it.
Thanks, man. It was a pleasure having you on. Thanks everyone for listening. Make sure to follow Luke over on Twitter. Before you get going, I always forgot. So I got 3 questions that I normally ask people at the end. So what has been your biggest investing mistake? You could say, from the Bitcoin standpoint, obviously. So what has been your biggest investing mistake?
Not educating myself enough.
Okay.
If I had have done that earlier, I would have been a Bitcoin maximalist in terms of how I store my money before 2020.
All right. Awesome. What is one piece of content or, article, podcast, YouTube channel, whatever that you want to recommend for someone to read, listen to, or watch? Some people listen off a bunch, but normally I say all you need to do is give me one.
My go-to is The Sovereign Individual.
That's a good one. CK loves that one. And then one last one. I know you said they can find you over on Twitter. Do you know what your Twitter handle is? I'm sure I'll add it to the description below, but do you know what it is off the top of your head?
Yeah, so it's my name, Luke Mikic, and then just the number 21.
All right. Awesome. Thanks so much, Luke. It's been a pleasure having you on the Amateur Investors. I'm sure we'll talk again soon. Thanks. Keep doing what you're doing. Love CoinBeast and what you guys are doing over there. So have a good one. Thanks everyone for listening, and I'll catch you later. Peace.
Thanks for having me, brother. Adios, guys.